Bitcoin, Ethereum, and other cryptocurrencies all saw a decrease of more than 10% in the first quarter of 2022. As a result, the total market capitalization of cryptocurrencies decreased by $205 billion. And Bitcoin was the most heavily affected. A number of investors were afraid that this decline might herald the beginning of a crypto market crash in 2022. But cryptocurrencies are becoming a more popular asset class, and they have acquired a great deal of traction over the last several years. And concerns about inflation, as well as the central bank's continued use of large stimulus measures, have driven the search for innovative techniques to safeguard the value of one's financial assets. And due to Bitcoin's large market capitalization, it experiences the least volatility in the market. So, are you also buying Bitcoin? Hello and welcome back to Crypto Cash Channel. Have you invested in any crypto? How are you feeling about the current market crash? In today's video, we take a look at Bitcoin so as to see if it's a trap. But, first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. So, let's get into it. In January 2022, Bitcoin, Ethereum, and other major cryptocurrencies began to see a precipitous fall in value. In accordance with CoinMarketCap figures, the total market capitalization of cryptocurrencies fell by more than $300 million for the first weeks of January 2022. The Russian invasion of Ukraine, as well as the country's high inflation rate, have both played a significant role in the fall. Some well-known cryptocurrencies, such as Bitcoin and Ethereum, have seen their value plummet by as much as 9% and 20%, respectively. And because it affected the majority of cryptocurrencies, investors became apprehensive about a possible crypto crisis in early 2022. Therefore, individual Bitcoin investors are unsure whether to acquire more assets at a lower price, buy the dip, or whether to sell them in order to avoid further losses. According to Peter Johnson, a Jump Crypto partner and co-founder of the DeFi Alliance, who spoke with Yahoo Finance, stated that Bitcoin is a risky asset at the moment. But the cryptocurrency market will likely see an increase in value in 2022, should favorable conditions arise. He asserts that macro inflation is really a favorable indicator for Bitcoin's future. And also, hundreds of millions of dollars in crypto hedge capital may be able to assist in the formation of a positive trend in the cryptocurrency market. But although cryptocurrency prices have fallen in recent months, this is not the first time this has happened. Between the months of May and the end of July 2021, the same market had a reduction of more than 52%. And in November 2021, the stock market experiences a 38% collapse. These recurrent crashes appear to have had an impact on investors' behavior, despite the fact that the market was experiencing considerable volatility at the time. Investors began to react to the market more slowly than they had previously. So, their activities eventually resulted in the development of a more stable financial market. But because of the current volatility in the cryptocurrency market, many investors have been caught aback by it. Manfred Hubner, acting director of Centix, a behavioral analysis firm, stated that despite the fact that the asset's price has recovered in the last 7 days, the lack of customer trust in the asset is bad news for the entire market because investors will be hesitant to make an investment in this asset for the intermediate term. His proof of increased public interest in cryptocurrencies was equally strong. It would, according to Hubner, assist in the short-term recovery of assets such as Bitcoin and other cryptocurrencies. But still, Hubner did express concern that the business is still subject to short-term losses as a result of waning client trust. Another indicator of the cryptocurrency market crisis is the decreasing trend in the values of digital assets. Moreover, $101 billion have been removed from the market in the last 2 weeks. And according to CoinShares, a group of North American investors removed a $47 million asset at one point. Other investors followed suit, liquidating well-known cryptocurrencies such as Bitcoin and Ethereum, as well as other assets, in a similar way. Other investors, on the other hand, have opted to place their money into Ethereum as a kind of investment. But during the past 4 months, investors withdrew more than $151 million from Ethereum's market capitalization. This statistic represents more than 1.2% of the total assets under control in the Ethereum blockchain. However, according to CryptoQuant, a cryptocurrency data company, the BTC leverage ratio reached an all-time high in early January, setting a new record. This implies that investors in the cryptocurrency market took on a greater level of risk. Loans are commonly used by cryptocurrency investors, just as they are by traditional investors, to support future acquisitions. Consequently, miners are being compelled to hedge their assets in order to avoid price drops on their mined assets in the future. According to Simon Peters, a senior account manager at eToro, leverage may cause short-term volatility in cryptocurrency prices. However, he also noted that falling cryptocurrency prices may result in long-term liquidation, which might result in a major reduction in the overall market price of cryptocurrencies. Investors who use leverage and liquidate the majority of their assets are particularly vulnerable in the cryptocurrency market. And by doing so, they are contributing to market volatility. It is not possible to buy large amounts of cryptocurrency on the crypto market, unlike the stock market, because there are no buyers queuing up to buy large amounts of cryptocurrency. Cryptocurrency collapses can also be triggered by concerns with blockchain and network security. A new government regulation, for example, might cause market disruption and cause investors to be apprehensive about acquiring and investing in cryptocurrencies in the future. Furthermore, security should be taken into consideration. If the security of a Bitcoin network is revealed to be inadequate, for example, fewer miners will want to operate on that network. There would be an increase in hash rate, and the price of Bitcoin would be altered. The public's perception of cryptocurrency has an impact on it as well. But while many people wrongly assume that a crypto crash and a crypto correction are the same things, there are some important differences between the two events. In conventional finance, a crypto collapse is often defined as a drop in the price of a cryptocurrency by more than 10% in a single trading day. This situation is usually brought about by a sudden shift in the general market. It is possible that a crypto collapse will be driven by a variety of technological issues. A wide range of macroeconomic events, significant company announcements, and regulatory and foreign policy changes are covered in this section. Cryptocurrency corrections, on the other hand, are a 10% price decrease in the market that lasts only a few days after an asset achieves its high. In the majority of situations, a downturn in the cryptocurrency market is followed by a comeback. It is considered to be a bear market when the price of a cryptocurrency drops by 20% or more from where it was previously trading. Rising inflation, lingering concern regarding the country's protracted battle with COVID-19, and new regulatory initiatives by the United States government, including President Biden's recent executive order, have all contributed to recent price swings and volatility. A little amount of activity may have a significant impact on the price of cryptocurrencies, which is especially true in a young and unproven market like cryptocurrency. According to a study conducted by Glassnode Insights, a blockchain analysis organization, new short-term investors who are selling their holdings in reaction to the current decline in the value of Bitcoin may be contributing to the drop in the value of the cryptocurrency. Even if fluctuations are to be expected, several analysts have claimed that some of the recent huge losses have taken them completely by surprise. It was their belief that the market was evolving and that occurrences like this would become less frequent as time went on. But they were utterly wrong. A combination of factors, according to experts, may be responsible for certain price declines, including investor interest in low-quality coins, harsh words from Elon Musk, and China's recent ban on cryptocurrency services. Experts feel that this confluence of events has the potential to make sell-offs all the more ferocious. There have been comparisons made to the 1987 stock market crash, which took months to recover from. But the fact that Bitcoin moves far more quickly today than equities did in the 1980s, according to experts, suggests that we may see a more rapid recovery. With Bitcoin's previous crisis, which saw it plummet from $63,000 to $30,000 before recovering to $69,000, there's no reason to believe that it can't dip as low as $15,000 before rising as high as $100,000 or $200,000. You may argue that this is exactly what cryptography does. However, the vast majority of persons should dollar-cost average throughout the cycle, and some will do so because they are more nerve-prone than other individuals. And that's it for today's video. Thanks for your time and attention. What do you think about the current market volatility? Will it get worse from here or improve? Comment below. Let's engage. Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. Goodbye. See you in the next video.